Assalamu alaikum. My dear students, today I am going to solve with you the accounting paper 1 igsc. Paper code is 0452/1 and this is May June 2010. There are 10 multiple choice questions in this paper. So let's start with the first one. Why does the owner of a business need to know how much profit he has made? Four options are given to calculate interest payable on bank loan. Bank loan is in the financial position. It is our liability, a long-term liability. And to calculate the interest, yes, the interest payment we write in the income statement, but it is giving only information for just one item, one expense, you can say, and that is the interest payment. Second option is to calculate the cost of sales. Again, in the cost of sales, we only will know the opening capital, the purchases minus purchases returns, then carriage inwards, goods taken by the owner for personal use, and then we minus the closing capital. So this is also giving information only about the cost of sales. And this is to calculate the total expenses, so only the information about the expenses. So C here is the right answer because C is giving us return on capital. In order to calculate the return on capital, we need the net profit. And when we need the net profit, definitely we need sales minus cost of sales plus other income if there is any, and minus expenses. Then we will get the net profit. And this net profit is multiplied by 100 and then divided by, I'm just writing CE, capital employed. So then we get the return on capital. Capital employed basically is when we calculate capital employed, it is calculated as non-current assets plus current assets minus current liabilities. So non-current assets, also called as fixed assets, plus current assets minus current liability. This is your capital employed. Second question. Which business document shows all the transactions that have taken place when with the customer during a month? So here, all the transactions with your customer. So credit note means when the goods are returned by the customer, so he is sending a debit note, and then as an acknowledgement, the seller is sending a credit note. Invoice is only when the seller is selling goods on credit. So we use the term invoice. The seller is selling goods on credit, which means that he's not receiving money right now, and there is an agreement that in 10 days, 15 days, or after 1 month, the customer will pay them out. So statement of account. A statement of account, this is a document where all the transactions of a customer are recorded. So invoice, debit note, credit note, the amount received from the customer, if there is any dishonored check. So all that information is recorded in the statement. Statement of account is basically the account of the customer in the books of the seller. Number three, a shop makes all its sales for cash. Where does the sales account appear? So this is, if you make the entry, cash account debit and sales account credit. This is our generalizing. So cash will go to the cash book and sales will go to the journal ledger. Answer, why you can say that why the answer is not sales journal. Sales journal is recording only the credit sales, and sales ledger is where all the account receivable customers' accounts are recorded. So here the right answer is B. Let's go to the next one. Which account could appear in either the debit column or the credit column of a trial balance? Means an account which may have a debit balance and or which may have a credit balance. So the bank is the right answer, because if the business has money in the bank, it is our current assets. On the other hand, if it is a bank overdraft, which means that we have taken money from the bank for a short while, then it will become as a current liability. So the bank balance can be on both sides in the trial balance. Bad debts is an expense. Drawings is it is deducted from the capital, and sales is our income. So they are always in the trial balance. The bad debts, it is always in the trial balance on the debit side. Drawings on the debit side, and sales it is on the credit side. Next, the cash book showed a balance in the bank of 1000 debit. On the same date, the bank statement showed a balance in the bank of 900 debit. When we have a cash book balance debit, it means that it is a debit balance. The business has 1000 in the bank account. But on the other hand, the bank statement is showing a debit balance. A debit balance means that from the bank point of view, the bank has to receive this amount from you. So from the bank point of view, you have to pay, the business has to pay the amount to the bank. Now let's see what is the reason for this. Bank interest received. If we have received the bank interest, our this debit balance would have increased. So it cannot be the answer, because here we have a debit balance. The business has to pay this amount to the bank, which is bank overdraft basically. Payments made directly into the trader's bank account. It means a credit transfer. So again, in credit transfer, our bank balance is increasing. So it cannot be an overdraft. Unpresented check will decrease our balance. So here our answer is the standing order. The standing order for property tax paid directly by the bank. What is an standing order? A standing order is an automatic payment from the business bank account. The instructions are given from the business to the bank to pay the required amount at regular intervals on a specified date, for example, a rent. So, on a specified date, the bank will automatically deduct that amount from the business bank account, and the bank will pay that amount to the required person or to another business. Next is, what is an income statement? Profit and loss account. So, it's a simple question. Option A and B, it says that a list of all the assets and liabilities. A list of all the assets and liabilities of a business. So then it is a financial position, also called as balance sheet. Financial position. So first cannot be the answer. This is the definition of a financial position. A list of all the assets and liabilities. Second is a list of all the balances in the ledger accounts of a business at a particular date. So this is the definition of a trial balance. C is a statement of receipt and payments of a business during a particular period. Receipt and payments. So this is a cash book. And D, a summary of income and expenditure expenses of a business during a particular period. So yes, this will give you the profit or loss of the business. Next is G, which entry is made to reduce a provision for doubtful debts. When the provision is created first time, so we are using the term provision is created, and first time it is also called as increase in provision. So for the increase in provision, this is our entry: income statement debit and provision for doubtful debts credit. When the provision for doubtful debts is created or increased. But here it says that to reduce a provision. So obviously it will be the reverse: provision for doubtful debts debit and income statement credit. So B is our answer. Next is the total of the sales returns journal is posted to the sales returns account. So where will the double entry appear? Sales returns journal. Make the entry first. What is the entry for the sales returns? So we say that sales returns is debit and account receivable is credit, because sales returns journal. So sales returns journal means all credit sales returns are recorded here. Is posted to the sales returns account. So in the sales returns account it is posted. Now where the double entry will complete, the double entry will complete, as I said, that account receivable, which is a debtors account. So here the double entry will complete. How is the working capital calculated? In number I, working capital, current assets minus current liabilities. This is working capital. And current assets plus current liabilities, no need for this. Non-current assets plus current assets minus current liabilities, as I explained in number 1. Number C, this is capital employed. And again D, not required. So here current assets minus current liabilities, this is the working capital. Working capital is excess of current assets over current liabilities. And the last one, a sole trader compares his results with those of a similar business, which shows how well expenses are being controlled. So expenses are in the income statement, and in the income statement definitely this section net profit. So our answer is D. Because bank balance, this will go to the balance sheet or financial position. So I'm just writing BS. Cost of sales, this is in the income statement, but cost of sales is telling you about the sales, and then minus the cost of sales, you will get the gross profit. So here the question is, which shows how well expenses are being controlled. So which part is for the expenses? We say that our income statement is divided into two parts: trading account and profit and loss account. So profit and loss account, the net profit part here. So D is our answer. So in this paper, the first 10 multiple choice questions, and I hope that now you can easily solve these multiple choice questions again. Thank you so much for watching this video.